All right, what's going on, everyone? This is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. In this video today, we're going to be talking about Bitcoin. Specifically, we're going to go ahead and open up your eyes into viewing Bitcoin in a new way that's going to tremendously give you an edge going further. All right. I have a lot to share with you today. I have a lot to unravel. I have a lot to share with you. Get comfortable, get ready to learn, and let's get into it. So, starting off over here, and what you're looking at is Bitcoin, and you're looking at its 4-year cycles. Every 210,000 blocks, the miner's reward is cut in half. And a lot of people like to focus in on these Bitcoin cycles. They like to focus on 2 points in the Bitcoin cycle that are really important: the low and then the halving. Normally, the low is the best point in time ever to buy Bitcoin, and the second best has been the halving. What I have done over here is not only showed you and broken up to where those halving events have occurred in these long vertical lines, I then added in over here the 0.786 retracement fib, and that comes from the highest price point to the lowest price point. And you could see in the past, in each and every cycle, once price has traded above the 0.786 retracement fib, it has gone into a very exponential growth phase. It happens over here in this particular area. Again, here's the high, the low, the 7.786 retracement fib. And you can see once price were to trade above it, how it accelerated. Again, here in 2020, it happened again. And then you could see that currently price is trading above it. And I could say a couple of things are different this particular cycle, in so much as that this is the first cycle price made a new all-time high before the halving, prior to the halving. That's new. That's different. Another thing that is different is, well, you can see that prices, since trading above the 0.786 retracement fib, it's kind of been consolidating sideways. It's just different. It's not wrong. It doesn't invalidate it yet. It's just different. When I add some further perspective to this chart, and you can see that trend line is going to have the same angle everywhere we view it. And that's just the earliest possible entry break. But I want to go off the highest price point each time, and show you that trend line lined up. And then I'm going to go ahead and there you go. I'll mark that in yellow over here. I'm going to go ahead again. That's just earlier. And this is the highest price point in yellow. And then again, the highest price point in yellow. Again, that's early, and that's the highest price point. And every time in the past, price has broken above after that cycle high and broken above that outermost trend line. Price has also gone into an exponential growth phase. And I could say, well, if that were not to hold at any point in time, if now that we have started this new cycle, and if price were to trade below that yellow line, well, that's never happened in the past. That's something that might be some form of invalidation, something I'd be watching out for, or am watching out for. And you could see how price went into those exponential growth phases. And here's another way to invalidate it. And I'm just going to draw in this trend line over here, because price in the past has not invalidated what would be that type of trend line. And I'll just highlight them over here before making a move into that exponential growth. So I have that trend line over there as what would be an awareness point. Be like, price made a new all-time high. That before the halving, that's different. Price, after breaking out above the 0.786 retracement fib, the outermost trend line, invalidating, that would be different, right? And right now it looks very healthy, as price is nothing more than consolidating, right, in this range. And it looks like a nice potential continuation pattern setting up. If it were to happen, it would be right on time to pass cycles. Let me go ahead, before I get into it, start off with this chart you're familiar with. And this is just lining up past cycles between the halving point, right? And some people might say, well, it seems a little off. Price is just kind of flatlining where in the past, we've seen more of an upward slope. And I would argue, well, coming into the halving, price was on a very upward slope, rising slope. And we haven't seen nothing more yet than a reversion to the mean. I don't really view that as too different. And if you were viewing without this most recent cycle and you were viewing the last two cycles, there were times when the cycles had deviated from each other at certain points, and there was nothing right or wrong with that. The cycles aligned a lot more than they did not, and you could even see that their highest price points, the last two cycles, were really within days of each other, and you could see their lows were also really within days of each other. So there's a lot more that has lined up than been different. And we're watching for when things could potentially be different. A lot of people like to say, well, the best time to buy Bitcoin is at the low of the cycle. Of course, if you know when the low of the cycle is, that is the best time. And the second best time has been at the halving. Coming into, you could see here's the halving, here's where the halving ended. Here's the halving, here's where the halving ended. Of course, the second best time has been the halving. And will that continue? That's another story. I like lining them up from their lows, from their cycle lows. And if you line them up from their cycle lows, I would say that the past two cycles plus this one are all really right on time. It would suggest, though, that we are getting close. We are roughly a couple of months out from where price in the past has begun to accelerate. A lot of people like to talk about, hey, well, Bitcoin doesn't key off the 4-year cycle. It keys off the US election cycle. And well, that Bitcoin in had its top in 2017. That was a year after the election. So a lot of people like to line up a lot of things. And right now, you'll also see a lot of people lining off these cycles off of the low because there's a tight correlation because they match. It's good to have a lot of different views and perspectives. But I'm going to offer a different one that probably hasn't been introduced to you in quite a while. And I'm just going to do this in order to help you be more prepared for what your expectations may be going forward. This is just looking at Bitcoins off of the all-time highs. And you can see, again, this current cycle was different. Instead of an 84, 85% drawdown, it had a 76% drawdown. That was different, right? And then you could see this tight consolidation and, is it lagging? Well, if we enter that period we were just talking about where we see in a couple of months some upward price acceleration, which may or may not match the seasonalities. What I mean by that, may or may not match the seasonalities. If you look at, Bitcoin and monthly price performance in November, December, we've seen some really big months come out of Bitcoin, right? And you could point to halving years in 2020. Those were some really big months. Then you go back to 2016, and those were green months. But again, it was the year after the election, 2017, saw the mega big months, and including in October. So that was really the year after the election. But seasonalities say that November and December could be some big months, or they could be some bad months too. We've had plenty of back-to-back reds. October is generally a very positive month. It has a nickname Uptober because generally it has some pretty consistent gains, but not always, with 3 times having double-digit losses. Coming off of the high, you could say that, well, if in October we were able to put in an Uptober month, that we may be aligned and pretty much matching past cycle behavior. But let's look at this a little bit different. Let's look at this through the lens of zooming out and looking at Bitcoin on a log scale chart. And it's beautiful. And Bitcoin is beautiful. And a lot of people like to think that Bitcoin's destiny is up to the right. And ultimately, because of the devaluation of the currency, likely it will be, right? Likely it will be. Now, gold is very similar in some aspects as Bitcoin, such as its scarcity. And although right now today gold is at a new all-time high, gold's path has not been up and to the right. A lot of people thought in the past, a lot of they call themselves like gold bugs. They really believe that, you know, gold would have done some golden things a lot earlier. And I don't think any of them had the price target of $2,600, which as it's trading right now, it's all-time high, as where they believed that it ultimately ends up, or where that it belongs. A lot of people believe that it's undervalued and it's been heavily manipulated. Do you think Bitcoin has been heavily manipulated? I think that there were some bad actors in this last cycle selling Bitcoin they didn't have that might have caused some suppression of price. I believe today there's a lot of more as we've seen Wall Street enter the market. There is a greater degree of trust me, you can't verify. Those things are different. People believe ultimately Bitcoin is going to do Bitcoin things. And looking from from its inception to where it is today, it's had a very nice path and it's been up and to the right. And a lot of people have focused heavily on those cycles. And I just want to take a look at the Nasdaq during that particular time frame. And the Nasdaq also is up and to the right. By the way, if you view this on a linear chart, you could see the magnitude of these moves. And this last magnitude, this is for perspective, this is that 76% drawdown we spoke about. This is an 84% drawdown. This is an 85% drawdown. So these moves up have been dramatic. And so far, to a lesser degree, diminishing returns. Likely for now, but not in the future, right? If Bitcoin is actually going to enter onto the world stage, as many expect, the amount of inflows is obviously going to cause Bitcoin to one cycle drastically outperform its previous. We're not there today. Maybe we'll be there tomorrow. What I want to focus in on is this correlation between the NASDAQ and Bitcoin during this period, which has been very, very clean and tight. What do I mean by that? Well, you all familiar with when Bitcoin put in its bottom December 2022, stocks put in their bottom December 2022. And if you look at this last little impulse that's taking place over the last couple of years, you could see there's a very tight correlation between the two. Now, there were periods when people were talking about how, oh, look, they uncorrelated, and for Bitcoiners in the wrong direction, as the Nasdaq was really in the summer of 2023 outperforming. And then you fast forward into March of 2024, and Bitcoin was riding the wave of there's going to be a launch of a spot ETF. And into that launch, it was uncorrelated once again. And it was outperforming the NASDAQ by a wide margin, except that in both cases, you had a reversion to the mean. And if you zoom out, it's basically the same path for the two. Now, that's not the only time that happened. You all remember the top of the market, November 2021, and you could see to the bottom, there were times where the NASDAQ outperformed Bitcoin, but overall, they took the same path, right? And that's just zooming out a little bit. If you go out a little bit further and you zoom out a little bit further and you're coming to obviously the bottom over here, March 2020, the bottom of the global lockdowns, where you saw Jerome Powell flood the system with liquidity. He's like, we just flooded the system. And you could see that even though there was a time where the NASDAQ was incredibly outperforming Bitcoin, right? And that's just because, like, with the rush of money, you see that funds flow into assets depending on where they are on the risk curve. And you could see all that money coming into stocks first, into tech, and then Bitcoin catching up. But ultimately, from the bottom to the top, they are taking the same path once again. And then you could do that. I love how it's like the heart, the laughing, and the smiling, frequently used, all good things. This the relationships continues over and over again. And there are specific times when you will see, obviously, you'll see the outperformance of Bitcoin. This was the 2017 blow off top. And in that moment, yeah, it was outperforming the NASDAQ, but very quickly there was a reversion to the mean. And this is probably a very important place to view right over here. So I'm going to zoom out a little bit. And what I'm zooming out to is where they put the bottom in. In December 2018, stocks had put in a bottom. That's where Bitcoin put in a bottom. And you could see that tight correlation. We'll look at that from a different perspective in one moment. But what I'm just trying to show you is that this relationship has been very, very tight and apparent. And guess what? There's no halving on the NASDAQ. There's no halving event that occurs on the NASDAQ in order to cause it to have this type of relationship that could be seen very correlated and tight with Bitcoin. And that happens from inception. So you could see that since Bitcoin being born out of the Great Recession, being launched as a response to the bankers' bailout, we have seen this new period of the QE period, and or I call it the Fed cycle. And during this period, there is an extremely tight correlation between the two. And here you can see over here, you could see that I just pointed out that December 2018, you could see the low here. You could see the low in March 2020, and you see the low in December, right? October, December on a this is a weekly on an intraday basis. And you could see the low occurring there. And then on Bitcoin, you have, again, those same periods. December 2018, March 2020, November, December 2022. The same exact periods are putting in the lows. The same exact periods are putting in the highs. And in between, there's certain times when NASDAQ's outperforming and certain times when Bitcoin's outperforming. But generally, there's a very tight correlation. And that's why what I'm trying to do is say to you, well, yeah, up until now, for whatever reason, it is aligned very tightly with the Bitcoin halving. And it is also aligned very well with presidential cycles. Although I will point out that, again, the 2016 election saw Bitcoin moving up, but it was in 2017, a year after that it was sent. So you have the 2020, that's when Bitcoin was sent. So it's the presidential election narrative. There's nothing to that whatsoever. All right. A lot of people like to talk about it. It's happening right now. That's not something that's going to be of use for myself or for you. And I could point out to two periods where the presidential election has worked out very poorly for equities. And many of you are familiar with what happened in 2000, the dot-com bubble burst, and also in 2008, when you had the great financial crisis. Both of those were election years. So it's not as if, even though seasonalities greatly favor risk assets, equities, especially in an election year, late November into December, not always. There could be bigger forces at play. Well, speaking of the tight correlation between the NASDAQ and or equities, and when I say equities, you could point out, or let me point out to you, here's the S&P 500 during that same period, and it's the same chart. Look over here, you have right here in December 2018, it put in that bottom. In March 2020, puts in the bottom. And then you have, S&P bottomed a little bit further in October instead of November. But generally speaking, a very tight correlation. And ever since the Fed cycle began, you see that upwards and to the right. And I bring up the S&P 500 because it's going to go back further in the history than the NASDAQ. And there's a particular period that I want to bring your attention to. But before we do that, let's move back over here. And I just want to, maybe before we do that, we'll come over here and let me show you the magnitude of these drawdowns. So into that 2018 bottom, December 2018 bottom, NASDAQ was off 21%. And you all know Bitcoin was off 84% during that period. Then you could point to the global lockdowns, and you see that the NASDAQ was off 28%. Bitcoin was off 62%. Now I could come off to the last tightening cycle, and you could see that NASDAQ was off 34, 35%. Bitcoin was off 76%. So I'm just going to say that in each time in the past that there's been a correction in the equity markets, the correction thus far on Bitcoin has been greater. Could that change one day? If Bitcoin were a let's say like a $50 trillion asset, do I think that the magnitude of drawdown would be smaller on Bitcoin than it would be on equities? Yep, definitely. I could point to you to this period over here. This is during the global lockdowns, and you saw the NASDAQ come off 30%. During that period, gold came off 15%. So I can make the case that if and when Bitcoin has a much higher market cap, that the drawdown could be much less during these times of risk off periods. That's not today, though. That's not right now. And in this current regime that we're in, whatever the magnitude of the drawdown on equities, Bitcoin's drawdown has been dramatically greater. And in where we are today in 2024 and into 2025 and 6, that's likely going to continue. So with that in mind, if you move back over to this particular period and you look at the magnitude of drawdowns and notice that a couple of things are different during this period, you could see that during this 10-year period, well, equities didn't make a higher high. Equities did not make a higher high. There was a lot of volatility, and it was more downside volatility than upside volatility. So that's something to be aware of. That a lot of people are accustomed to the last 15 years of risk assets going up and to the right, and that might continue in the near future, or that might not. We don't know. And certainly the halving event has nothing to do with it. But if you look at the magnitude of these drawdowns, here's the great financial crisis, and you look at the magnitude with the NASDAQ coming off 55%, I would gather that Bitcoin's drawdown would be significantly greater. If something like that were developing and we saw something like that happening, I think then that it's safe to say that this trend line would be invalidated, that the cycle's nature is going to look dramatically different. And at best, this trend line over here would be tested. And it doesn't mean it would hold. If you look at what happened during the last time that there was pressure during the global lockdowns on Bitcoin, Bitcoin's price came off at that particular point in time. I think it was 62%. This is showing me, I guess, from intraday high to low, it's showing me 71%. Okay, it's 62% off of here. Fair enough. So this is off the June high. So off of the high, the price did come off 72%. And could something like that happen again if we were to witness some type of banking crisis, some type of financial system crisis, some type of lack of liquidity where the system needs to be flooded? Yeah, absolutely. That could happen. If that were to happen, though, likely, obviously, they're going to need to go ahead and flood the system, and then the recovery out of it would be pretty easy. But this was not that case. This didn't happen over a 6-week period. This was obviously and developed over a year. And if you were to see the NASDAQ come off 50% plus, then likely that, first of all, Bitcoin is going to exceed that. We would all expect that. And then you could come back over here to the dot-com bubble burst. And yeah, this is much different than the phase that we're currently in right now, because we're not currently in a dot-com bubble. We're not in an AI bubble. We're not even in a overextended. Well, people might argue, yeah, we are. We're in the everything bubble, and price has been going up for the last 15 years, and it's overextended. But strictly from a valuation perspective, we are nowhere near the type of bubble that we were in back then. So I'm just going to make the argument that likely we're not going to see something like this unfold over the next near future. But look at the magnitude of that. NASDAQ came off 77%. If you would have said to anyone in 1998, 1999, or in 2000, at the beginning of 2000, first quarter, that the NASDAQ was going to come off 77%, every single one of them would have probably and likely called you absolutely crazy and said that's never going to happen. We're just coming out of this beautiful, beautiful phase over here. Look at that. And you could see over a 10-year period, over a little 10-year period, up and to the right. And that's what people were conditioned to. Yeah, of course there were pullbacks and of course there were drawdowns. Let's come back a little bit further over there. And you could say, well, like we're in now for a 15-year period, it was up and to the right. And of course, there were lots of shaky events, but not over this 10-year period. People were conditioned into, go up and to the right. Oh, they're having every 4 years. Bitcoin up. It's not how it is. That's not what your expectation should be. And we are coming out of this period where that's how it's been for the last 15 years. And if NASDAQ were to come off 77%, I don't think Bitcoin is going to make a lower low than it did, first of all, in December of 2022. And that 84, 85% drawdown that you've seen in past cycles, that's actually going to come into question of whether or not that holds or we see a deeper drawdown. All those things are on the table and without question. But more importantly is that we may or may not see a period of time that resembles something like this over the next 5 years. Or I could say that over the next 5 years, as monetary reset is happening, it's unlikely that we will continue to see straight up and to the right. And you should be prepared for other outcomes. Otherwise, you're going to get comfortable. Otherwise, you're going to take risks that you shouldn't take. Otherwise, you're going to put yourself in a position when under pressure, you're going to make a bad emotional decision. Now, another piece of time that I would like to point to you is this over here on the S&P 500. Now, the NASDAQ doesn't go back that far in time. The NASDAQ over here, we have coming back into 1973. But I do want to focus on the 1970s a little bit more with you and the price action of the 1970s, because I'm not trying to insinuate that what's in store for the NASDAQ in the next 10 years is going to resemble anything like we saw during the decade of 2000 to 2010. It may, but I'm not looking for that. And we might see something like this. And in the 1970s, you saw very volatile price action. Look at this with me, please. You saw, first of all, a drawdown of 22%, right? Which is pretty much in line with the drawdown we saw during the bear market of 2022. And then you saw a nice rise, 50% out, and then a drawdown of 32%. And then out of that drawdown of 32%, you saw a rise of 65%, followed by a drawdown of 47%, followed by this nice rise out of it. And you could see that the rise ultimately 127% before finding a footing and heading up and to the right. Now, if Bitcoin were to see, and my expectations personally over this next decade is that we're going to see sharper and shorter cycles. We did see that occur during this tightening cycle. This tightening cycle was the sharpest tightening cycle on record. Will this next easing cycle match that as the easing cycle began this past week? I mean, I don't think so, but I get into my in-depth macro view on a regular basis, but that takes a lot of thought and explanation. We're not there today in this video. This video is more about setting expectations straight and removing your past bias for what's occurred over the last 12 years. Because the last 12 years has been up and to the right. And not just for Bitcoin, it's been that way also for the NASDAQ. It's been that way for equities. And by the way, if you look at it from this perspective, right, I know that Bitcoin is a monster. And when you look at it on the linear, you could see the magnitude of those rises. And that's true. But I mean, also the same on the NASDAQ. You're looking over here from November to 2018 in 2-year period, you're looking at on the NASDAQ, this 2x occurring. And then you're seeing over here from March 2020 to the top over here, a 2.5x. Those are monster moves. Yes, it's not the same on Bitcoin. Obviously, the market cap of Bitcoin was minuscule during those early hype phases. It's changing, right? Bitcoin did put in a monster move off of its 2020 low, right? NASDAQ putting in a mere 135%, which, by the way, it's done again off of the December low. Maybe not 78%, 135% off of the March low. What did Bitcoin do during that period? Bitcoin during that same period, let me go to the March low, put in a mega monster move. Look at that beauty. Mega monster is appropriate. And do I think that Bitcoin's move ultimately, as it peaks in this next cycle, do I think it peaked, by the way? Do I think that Bitcoin peaked over here before the halving? No, I do not. I don't think personally, and Bitcoin, if it's able to break outside of this consolidation pattern that it's currently in and if it's able to break to the upside, right? It's in the middle of this 6-month consolidation period. It could break down. It could break out to the upside. If it breaks out, it's going to put in likely, I'll be looking for an invalidation, but likely a beautiful leg upwards. And you'll see eventually a high put in, and then likely at some point, whether or not it's 2025, whether or not it's 2026, likely it's going to be under pressure. My own personal belief is that the Fed, which just begun their easing, pivoting to easing with their 50 basis point rate cut, that likely their next move is going to be, as right now you have QT running, quantitative tightening running, their balance sheet is decreasing. Eventually, they're going to stop that. The next move by the Fed is going to be to stop QT, and either one of two things is going to happen. Either they're going to pause and just let their balance sheet run flat, or more likely they're going to go from QT into balance sheet expansion. That's not outright QE. Outright QE is when they're into full-blown easing. When that happens, you're going to see Bitcoin be doing Bitcoin things. Bitcoin's going to be running. I put that at some place, and that's impossible to time, but I put it at some time, probably late 2025, 2026, when the Fed returns to outright easing. And when that happens, regardless of whatever high is put in over here, I believe that Bitcoin is going to take out that high. So does that resemble more of something like a double cycle that you saw over here in 2013? Yeah, it likely will for different reasons, but that's likely what we're going to see happen. The navigating, though, between today and when that happens, that's the most difficult point of the cycle. That's the most difficult point of the cycle. That's what we're here to do together. I hope you enjoyed. If you enjoyed this, let me know. Comment below. Hit the like button. Smash the like button. Share it with a friend. Everyone, have a beautiful day. God bless you. I'll see you all soon.